All right, guys, I'll give everybody a couple minutes to join and then we'll get started here. Yes, the S&P, if I read, unless it was fake news, but yes, the S&P or SMCI is going to join S&P 500. Might be more of a, I mean, I don't know. You just have to see if the charts are setting up. I wouldn't just jump in it because of that. We'll see. Okay.
One chicken, okay? Okay. Oh. So here by the.
Okay, let's get started here.
Thank you for letting me in.
No problem. Okay. All right. If you guys have stocks you want me to look at or cover, just put them in the chat and I will cover those. We'll kind of get going here. Okay. So first of all, taking a look at the markets. I think a lot of you know my stance by now on how I think the markets look. We've talked about it quite a bit past few weeks, and we were have been waiting for this move that happened on Friday. It's not really a coincidence that typically the first and last Fridays of the month typically are trending days for whatever reason. And we got exactly that on Friday. You can see here, clear trend up. Very nice move. Then, so if we're looking at charts, and we can see here, we've got this daily squeeze that is yet to fire. It's looking like it's about ready. We broke this high here at a break of structure. Clear uptrend. So really, I mean, there's nothing bearish about this chart, right? You can see here, we've kind of continuously bounced off of support over and over and over again. Go this off. And you can see here, we've just continued move away from the 21 EMA, back to the 21 EMA, away from the 21, back, up, and just following the 21 EMA over and over again. And holding that is kind of almost like a trend line, right? Okay. And then on top of that, so daily squeeze here in NQ. Okay. What are some of the components in NQ? Well, number one, and by far the most, is XLK. Okay. This is the tech sector. And you can see here that we have been in an uptrend. We kind of created a flag here. Few inside candles, was never able to break out of this inside range here on this candle right here. You can see here's the low of that candle. Here's the high. And we were never able to break out of that. And then when we did, we had a really explosive move, right? Now, it was pretty obvious that we were going to break out upside. And reason being, you can see clear uptrend, stacked moving averages. We had a squeeze, so we were building up energy to break out to the one way or the other. And when you look at each of these components, you can kind of see that the NASDAQ is more than likely going to lead this charge, basically. And I think that was evident on Friday, but we kind of already saw this coming because we've been talking about this for quite a while. Now, personally, I was a little early on this. I was looking for, we got in this day looking for a breakout. Then we kind of traded sideways for a while and held on to our contracts, added more throughout this time, and then had that huge push up and turned into a nice couple of days. I was expecting something more like this here. Or really, you can see anytime the momentum shifted on the squeeze. That's kind of where the breakout continued to happen. So with the NASDAQ, we talked about XLK. You can see here, squeeze, we're breaking out as yet to fire. Momentum shifted on Friday. We had a push up into new all-time highs, and we had been talking about that all this week. And then from there, another key sector in the NASDAQ is XLK, another stock that had a few inside days in a row. And you can see here, we had this gap down, traded inside this range for a few days, and then we broke out to the upside. So then from there, we're kind of running into this resistance area, basically the top of the range. Here's kind of the bottom of the range here, and then there's the top. You can kind of mark this out. Now, for those who are unfamiliar, XLK holdings are Microsoft's number one. Then you've got like Apple, NVIDIA, things like that, your tech names, right? And then XLC is more communication. So this is covering Meta, is the by far the top holding, and then Google, and then Netflix, Disney is also in there as well. Those are kind of the names that are within this sector. So how do we know that we were going to get a breakout this on Friday last week? We didn't know it was going to be Friday, but it was kind of expected based on how the market typically trades with trending days on the last Friday of the month. That's a pretty consistent trend. But other than that, how did we know? NASDAQ was in a daily squeeze. That's probably the most obvious sign. And then you can see the components within it were in daily squeezes as well. So XLK, XLC, these are the main components within that. And then from there, XLY has already been firing off and fired the squeeze and has continued strength, broke this high and has continued up. We also had another 4-hour squeeze that fired and has continued to go ever since. So I mean, those are the main cylinders within the NASDAQ, and they all look great. Not to mention the fact that we are in a monthly squeeze on XLY that is just fired or trying to fire this month. Okay. And so now what's interesting is we have a lot of other sectors in the market that have been breaking out. And XLB is one of them. We played this one. Home builders is another one. And these kind of have been off to the races. XLI, which is industrials like Cat, John Deere, things of that nature, Honeywell. We've had a lot of names, a lot of outperforming sectors as of recently, and tech is kind of taking a breather. So now tech is starting to pick up some steam while these other sectors are rallying. So that's only going to help the S&P 500. But I do think the NASDAQ has a little more breadth because it's taken a little bit of a breather. I mean, both indexes have, but at the same time, tech has a little bit more, considering that we've entered into a daily squeeze, right? These other ones are kind of firing off at this point. So even those people that just trade futures and stuff like that, it's really beneficial to know what these sectors are doing, because they are what make up these indexes. And so if we look at the things that make up S&P 500, XLF, it's XLK, which is clearly firing off and is the biggest component. Then we've got XLF, which is flagging here. And this is why you can kind of see that the S&P is lagging. We played this one as well, but we're kind of flagging. We've had our move. We got the squeeze. We fired off. And if you look here, what happened last time we fired a squeeze? Boom, we had it fire off and then traded sideways, formed another squeeze, and then popped off again. So I would imagine we may consolidate sideways to up and kind of just follow tech and the rest of the market, or we may just take a breather here for financials. And then if we look at last really third cylinder within the S&P 500, which is healthcare, I think this one's got a lot more to go. We might consolidate sideways for a little bit, but you can see here, monthly squeeze broke this high, and looks like we're ready to go to 150. So I'm looking at any opportunities to get into this one to see a break of this high here and then ultimately head to 150. I think that's a pretty easy target. We have a 4-hour squeeze here, so that's what I'm going to be paying attention to see if we can get that move up. And so all of the sectors look good. It looks like XLV. So what am I trying to say here? Look, you can see healthcare broke out, right? And had a nice move up. And you can see that financials broke out a couple weeks ago and had a nice move up. Okay. Now, if you look at the S&P 500, we've been trading basically kind of sideways to up, and now we're getting a strong little breakout. Okay. And if you look at the NASDAQ, it's been more sideways, right? It's been more sideways action since around January. So pretty much all February, we were trading sideways on the NASDAQ more than the S&P 500. Why is that? Because if you compare these two charts, right, you can see this one has pretty much a stronger trend. And then the NASDAQ, little less of a stronger trend. Why is that? Because tech has taken a breather. XLK has been trading sideways since same time, pretty much end of January. So now we're finally starting to get a break out of this range. Okay. We had to try to break out, pull back at the bottom of the range, came up, traded sideways, and broke out again. Okay. So ES has been trading, or S&P 500 has been trading sideways to up because of XLF and XLV. They've been breaking out, and it's been picking up the slack for tech. Now tech was trading sideways, and now it's just money rotation, right? And we'll talk about this more in the mentorship for those who are in it. But this is kind of the main concept that I pay attention to. So now you can see money is rotating into tech. How can we tell? Well, make it really obvious for yourself. Look at XLK was up almost 2% on the day on Friday. And same with the NASDAQ. XLC was up 1%. And then if you go look at XLF, it was slightly down on the day. So you got to know where to put your money in the right places. So that's number one. So what I'm saying is that I think it'd be wise to have a focus on tech this week. Specifically XLK, things in the XLK and things in XLC based on the way the charts are looking. Okay. And then a couple other sectors we can take a look at that I think could have some influence in the markets. This one here, XLP, this one's just in a solid uptrend and has been. You can see it's making clear higher highs and higher lows, right? Pretty simple. Now it's got a squeeze, got some momentum to the upside. We've got the psych level of about 75 right here. And I think that once we break that, we could see a pretty nice move upside. So I'm watching this one. I don't like all this congestion up here. Can make it a little hard for this to travel upside, but I do like the potential of this because of how solid this uptrend is. From there, energy has been interesting. We've been keeping an eye on this one for a while. What's most interesting about it is that we've kind of switched trend. We're finally trying to break this higher low here and or lower high here. You can kind of see where we shifted trend, right? So we got this lower high here that created a lower low. Oh, broke above that, traded sideways, broke that high again, made another high, then made another high. So we're kind of trying to start a new uptrend, right? And now this would kind of coincide with what the weekly time frame is doing. The weekly just crossed over stacked EMAs again. But I mean, overall, it's choppy. So if we zoom out even one more time frame above, you can see here the weekly or the monthly has been holding the 21 EMA beautifully. It's came down, couldn't even test it, popped back up, came down, held, came down. We've had numerous monthly candles that look really good in terms of holding this level. So I wouldn't be surprised if we go at least sweep liquidity up at this area here. Okay. There's probably a lot of stops up here. So I wouldn't be surprised if we went and wiped up those stops or wiped out those stops and then potentially went to $100. So I'm keeping a close eye. I'm potentially getting in XLE for a longer term swing. I think any dip buys at this point, now that the weekly is kind of triggered a pretty good setup, that we could see a nice move here on this one. So keep an eye on that. And then if you look at the real estate sector, this one's a little sloppy, but if you look here, you can see we have a nice what might end up being an inverse head and shoulders. I don't really care about that much. The main thing I really care about is the fact that we broke above the 21 and then came back, retested it, and are holding it. had a nice kind of you can't call it a hammer candle, but nice long wick to the downside where buyers stepped in. And then from there, we've kind of held the 21, and had a nice push up. On top of that, you can see here we've got a daily squeeze, we've got stacked EMAs. We see a pullback here. We could see a nice move up. So I would just be looking for that 93 area. Go retest that high there. And then if we break above that, we could see a pretty nice move of continuation up, possibly go see $100. So we may want to pay attention to this one. Okay. You can kind of notice that money always rotates into something, right? It's always going to be rotating into something. So the goal is to find what sector money is rotating into. Another one here. If we look at the weekly time frame, charts. I probably won't trade this one, but it's worth keeping an eye on. You can kind of see this bull flag that we're forming. It's more obvious on the weekly time frame. Looks very similar to IYR. IYR is just a little cleaner. You can see it's a break and retest of right here. You can see it's a solid break and retest here, and I think we could see a continuation back up into 62. And other than that, I'm just keeping an eye on these. I'm going to be keeping an eye on these sectors and trading those. Uh, like I said, XLK and XLC are the main sectors I'm going to be paying attention to this week, just because I see strength in NASDAQ. One of the names I really do like going into this week that I think we'll see new highs is Microsoft. I think this one can head to 420 relatively quickly. We are in a position in this one already. We're up about 65%. I'm just looking for this one to continue up into 420. But this is probably my favorite chart going into this week. And then a few other oddball names. I guess not an oddball name. Amazon. I think this one, we are not far from all-time highs. So any nice longer term kind of squeeze setup, I'm going to look to play a move up into 190. And then from there, we've got 200 on the horizon, right? And then last one I'll give to you guys is GoDaddy. Super random stock, right? But if you look at this monthly time frame, massive breakout of this range. Okay. And then from there, we have been just chugging along upside. We've got daily squeeze. And I think that we could see we had earnings, obviously a beat. And I think this one could be a very nice move to the upside. And so I'm paying attention to this one. We're right near all-time highs with a monthly squeeze. So I think this one's an easy one to play. So I'll take a look at any charts that you guys might have. You can put them in the chat and I'll look over those. You can go over SMCI because you were asking about it.
Just real quick, I'm new to your group, or well, I'm gonna actually join after I heard you're speaking right now. I like that it looks like you're gonna trade, you trade mostly options, and it looks like you guys are more for into like more than just one day. Is that correct?
Yeah, I if there's an opportunity to day trade, not every day is going to be a day trade opportunity. Like if you were here at the beginning of the call, I talked about how on Fridays, the end of the month, are typically a trend day. Going in knowing that, I did day trade this to the upside and actually had alerted everyone to get in the day before, but 9 times out of 10, I'm swing trading because I want to catch moves that are like this rather than like this. I'm not, the whole point of trading is to not have to work all the time and catch the big moves. So I'm more interested in catching the big moves, not trading 10 times a day, but just trading very selective, high quality trades that are going to give me a few 100%.
I love it. I like the, not taking breadcrumbs, taking the whole loaf.
Yeah. Well, I'm looking for my piece, but at the same time, I think a lot of people that on Twitter, things like that, get way too caught up on trying to trade the lower time frames, and it just doesn't. In my opinion, it's not worth it. You don't get paid enough. You'd rather just catch this whole move, and yeah. So, all right. Let's see. So SMCI, if you look here, this one, I mean, I wouldn't say anything besides go long, honestly, because there's nothing really to this one. Um, I wouldn't try to fight the trend, is what I'm saying. We pulled back to the 21, tried to get there and couldn't even do it. So now we're trading sideways. What I find interesting that you may want to consider trading is the amount of inside days we've had within this candle. So if we break out outside of this range of this candle here, that should be interesting. APG. All right, so for this one, it looks good. I like it. Let's see. Yeah, this one's at new all-time highs. Yeah, actually, I will probably add this one to my watch list. This one looks good. Only thing is, it's a little extended, but if easy way to solve that is, let's say you're willing to lose $500 in a trade, size for zero on something like this. It's already made a nice move. So I wouldn't put a full size position in this and say you're willing to risk $500 per trade. Then I would put only $500 in here and let it go to zero, like it's your stop loss, and see what kind of move you can get out of it. So that's how I'd play this. I would basically size for zero, or wait on a pullback, but you might not get that considering looks like they might be rallying off of earnings or news or something. Um, yeah, some news. So that's how I'd play that. It's just a little too extended at this point, but this is a nice bullish candle. How's the volume on it? Yeah, high volume. So there could definitely be some follow through. It's just if you're gonna freak out, if it pulls back to the 21 EMA here or anywhere in here, then I would not play it. But if you can handle the pullback, I like it. Okay, so pawn. I wouldn't touch this one. It looks like it's gonna. I mean, it gapped down after earnings. If anything, I would look to short it. Um, Typically, when a stock moves 2 times its average true range on an earnings gap, a lot of the times it's going to have a continuation. For whatever reason, they beat, but the market did not react, and that's the thing you want to pay attention to. Now, maybe you had an inside candle here on the weekly time frame, so daily looks like it's trying to start a downtrend. It's just the chart's ugly. I would kind of stay away from it. EM. This one, way too many gaps for me. I don't think I'd want to play it. And it looks like, yeah, I wouldn't. Somebody brought this up a few months ago, um, or weeks ago, maybe. I would not touch this one. It's so congested. It's been in a range since literally 2006. It's been in a range. So I wouldn't even look at this one, to be honest. It's just you want to trade things where money is flowing into. Like prime example. You can see money is flowing into this one. People are buying this thing, right? It's clear, it's obvious. Nobody is interested in EEM because it's not going anywhere and it hasn't since 2006. So, like another one, APO. This is one I'm watching into this week as well. Money is being flown into this thing. This is the monthly chart. You can see since April, less than a year, it's gone up almost 100%. These are the ones you want to pay attention to. This is where money's flowing into. See how it's moving? Hopefully that helps. SoFi. This one does have a weekly squeeze. It's just one of those kind of bottom of the barrel stocks, right? If we do get a breakout above this kind of 110.50 area, we could see this 1173 52-week high or 1170 52-week high. And then from there, more than likely, we're going to get stopped up in this area. So, I mean, there's potential. It's just there's other things that I'd rather trade. It might stage a reversal. It's just like, I think there can be better things to trade. But above this kind of IPO price could be interesting. IPO low, you can see it's rejected a few times. So if you really wanted to trade it, I would look to get in calls right around now. Anywhere between here and this low right here would be valid to be into this trade. And then I'd look for this breakout of this area right here, 1014, and then look for this level here. And then from there, you can probably go see into that 14 or $13 to $15 area. CL. But here's just like a little thing to think about. If you're going to trade stocks long, trade things that look like this. It's a lot easier to guess which direction this is going to go versus this. See what I'm saying? A lot easier to figure out which one this one's going to go to. This one's probably got 300 in it soon, so I'm going to pay attention to that as well. Okay. Let's see. CL. Okay. We kind of went over this one already. This is the same thing as ES. Or sorry, this is the same thing as or similar to XLE. I think the daily squeeze may happen. It's just you got a lot of resistance up here. So I've on my own, I have traded this a few times in the past couple weeks. It's been 40% trim some, stopped out at break even. 40% stopped out at break even. And then I just decided not to play it on this next time because it's just been annoying. It's just not having any follow through. But the daily squeeze looks like it's going to fire off long. So does the 12-hour, and so does the 4-hour. So more than likely, I think this thing is going to continue higher. It's just, you got to be able to not stomach, but hold through some shakiness. It's just, it's been weird and choppy and slightly frustrating. But you can see here, it'll chop and then make a strong directional move. But you can see how many wicks, like this wicks up and down a ton every day. And so you just have to be mindful of that. So I would size smaller, and you can see range, boom, range, boom, range, boom. And then now we're in a range, probably going to make a move. And I would guess upside, and I would just size smaller and look for the move to happen. But these lower time frames, like the 12-hour and 4-hour, look like they're about ready to fire off. See upside. And you would have to size smaller because if you're buying it off the 4-hour or 12-hour, it's pretty extended. It's outside of one ATR. So I would size for a stop loss all the way down here to give this play a chance to work out. All right, guys. Well, that looks like all I've got. Just a little recap, things that to pay attention to into this week. XLP is just a good looking sector in general right now. But the main ones you want to be paying attention to are XLC and XLK, and then the NASDAQ. As you can see, that's where the strength is. We talked about that all earlier in class. If you guys are interested in joining the signals chat, we had a total of 695% gains last week. So that means if you put $100 in each trade, you would now be at roughly $700 profit. So if you're interested in doing that, that's 1 week. We offer a 1 week free trial. I'm not saying that's going to happen next week because that's not how the market works, but you can see all of our results in the our results tab in the Discord, and it's a free week trial. You don't like it, cancel it before the trial's over, and so on and so forth. We offer signals. We've got all the great educational content, all that good stuff, and the members in there now, I'm sure they can tell you it's pretty great in there. So if you guys have questions, let me know. DM me in the chat, and I will see you guys for the markets tomorrow. Be aware, Jerome Powell speaks a few different times this week, so pay attention to that. I think it's at like 10 a.m. one day, and then 9 a.m. another day. I think it's Tuesday and Wednesday, but we've got that posted in the economic calendar. All right, guys. Thank you for coming, and I'll see you for the markets tomorrow.